So we've got some more breaking news. So Treasury Secretary Scott Bessent is down at the Dallas Economic Forum right now, and he's speaking. And that's where these headlines are coming out. This, of course, has, as you can imagine, dominated the conversation at the forum. As I mentioned with E.J. Antonio just a moment ago, the Treasury Secretary is saying that basically you use the Section 122 authority, that is from the Trade Act of 1974. He said you combine that with parts of Section 232 and Section 301, and that these tariffs will not change. The president's tariffs will be in place because of these other mechanisms. He also just said a few moments ago that he was little surprised by the Supreme Court ruling. Those comments coming from Treasury Secretary Scott Bessent. He's speaking right now in Dallas. Now, after the decision and the ruling from the Supreme Court this morning, my next guest is telling people, look, it's time to buckle up. I want to bring in the Kobeissi Letter editor-in-chief, Adam Kobeissi. And Adam, I first want to get your reaction. What is your opinion of the impact of this ruling from the Supreme Court today? Or does nothing change?
Yeah, I mean, look, the initial reaction, everything kind of drifted higher in the equity market, and basically all risky assets kind of rebounded on the news. But it was pretty clear, and we put out a report on this very quickly after the ruling came out, that it would have pretty little net impact on tariffs overall. And now with President Trump already announcing new 10% tariffs, Section 122, Section 232, and all these various other measures that they're going to go to impose tariffs, we don't expect to see much of a net change. I think the reason markets like this reaction or this ruling is because there's now less uncertainty. It was pretty largely expected that this was going to be ruled as illegal by the court. I think it was around an 80% chance prior to the ruling coming out. And now we have a little bit more of a framework as to where things are going. But more broadly speaking, tariffs have kind of been accepted by the market. They're not necessarily something that have, even for the last few weeks now, months now actually, have been something that have been largely ignored by the market. I mean, we're at near all-time highs in equities. Earnings remain strong. Mag 7 companies are set to spend almost $700 billion in CapEx this year alone. And the AI revolution is in full swing. So our view is largely unchanged. I think we see more volatility, but it just continues to push higher on the equity front.
Well, Bessent just made another comment crossing fights over refunds can be dragged out for weeks, months, or years. And we heard President Trump say that when he was speaking in the briefing room at the White House within the last hour, saying that this is going to be litigated. You've got more than 1,000 companies that are suing the federal government right now because they want their refunds. What about the bond market? What do you make of the reaction we're getting from the bond market?
Yeah, so the refunds part is interesting because there was nothing mentioned about refunds at all in the ruling. So there's a lot of stuff up in the air now. Those refunds are expected to be as much as $175 billion just for the IEEPA tariffs, right? So that's one thing. That's definitely going to be ongoing, probably I don't know how many years it's going to take for that to be sorted out. But if you look at the bond market as part of your second question, we pointed to the bond market right away when this happened. And even now, it's almost net unchanged. Look at the 10-year note yield, still trading around 4.1, maybe even under that level right now. We were up like 1 basis point overall after the ruling was announced, an hour after it was announced. If this was something that was, groundbreaking or materially changing to the macroeconomic backdrop, the bond market would have moved far more severely, right? And we saw that in April 2025 when Liberation Day first happened. And throughout the various bouts of the trade war, the 10-year note yield was rising pretty sharply when markets became concerned about tariffs and shifts in economic policy. The fact that there was no net change, not only in the bond market, but also in the US dollar, and risky assets actually pushed higher is pure evidence that basically there's no net change on the tariff front, maybe some small technicalities over the long run. And I think it's actually bullish for risky assets because now you have more certainty as to what's coming next from the trade perspective.
Interesting. A little risk on. Adam, thank you so much for joining me on this breaking news. Really appreciate it.